America's the greatest country on the planet to be able to innovate and create and invent. We are like, that's our blood is to do that. All I want at the end of the day is what are the rules that we have to operate against so that way we can continue to innovate. And I think that there's a large group of people who want that in the industry.
Happy 100, Sam.
Avery, happy 100th episode. I could not imagine a better person to spend 100 weeks of my life doing the show with than you.
Well, thank you so much. I am so happy we made it to 100. I can't wait till 1,000. I love this every week. And this is actually a very special guest, one we've been talking about having on the show for literally years. And we decided, you know what? Today's the day.
Absolutely. We'll get to that in a second. Avery, crazy amounts of things happening in the world, though. Today, there's a big drop that happened on Twitter about MrBeast being under investigation in essence, an insider trading scheme around crypto. Now,
Yes.
This news has been floating around for a couple of weeks in the crypto pubs and Twitter, but today the investigation dropped, which was like a wallet analysis, went very, very deep on him making somewhere in the neighborhood of about $20 million on what seems to be inside information, helping companies promote tokens, a lot of the stuff that we've seen some other celebrities get dinged for. And it just made me think about, he's not talked about crypto in quite a while. So I think this is all like 2021 stuff, 2022. But, we're still going to see this stuff come out. And as one of the biggest creators in the world, I can't imagine this is good for MrBeast right now.
There's a lot going on in the land of MrBeast and speculation. Some of our community might be following along. There have been some serious allegations around MrBeast and sort of his company that have come out over the past couple of months, and it seems to kind of be picking up momentum. Let's put it that way. And coming from a few different angles on different things. So this is yet another concerning allegation. MrBeast is famously the biggest YouTube creator. He's absolutely iconic and has built humongous businesses on top of it. Very famously telling brands that they can't afford to advertise with him. It's too expensive. So he has launched his own companies, MrBeast Burger, Feastables, and some others. And it's funny because I've noticed that in the past week, those brands have actually been like outbounding a little bit more. They've been looking for collaborations and partners and things like that, a few months ago we would not have seen. So I'm following these stories. We're not doing any work ourselves with MrBeast at the moment, but looking forward to seeing what emerges as the truth and clear. The crypto piece, though, this is a very new angle that I think just came out officially in the last day or two.
Yeah. And one of the things that I think it actually highlights, which everyone listening should recognize, is crypto or blockchains are transparent. They're permissionless, right? So when, 3 years ago, someone talks about a certain CryptoPunk sale and then MrBeast comments it and says, oh, that was me who picked it up, someone now knows his wallet. And someone with a lot more sophisticated tools than you or I have starts to go deep. And that's what happened, where they found this web of I think it was 50 different crypto wallets that all were involved in getting tokens, dumping tokens, and then you see the social that's happening around it, and you start to realize maybe what feels like a little bit of organic stuff is just not really organic.
Sam, this is certainly not the first time nor the last time that a celebrity will be involved in such allegations. So this, if anything, is an important warning for everyone listening to do your own research, do your homework, especially if you're reading celeb endorsements on platforms like Twitter and Discord and Telegram and Signal, wherever else you get your endorsements and group chats.
Absolutely. Avery, the last thing I want to ask you about, and I just want to get your opinion, and then we're going to get to our guest, is this week that we're recording this, and maybe by the time this episode comes out, Bitcoin will have hit close to or at or beat its all-time high. We're in the 72, 73, 74K range right now. One of the things that we're seeing on the data side, and a lot of people are talking about, is what we're not seeing a lot of is retail interest, that it seems to be just within the crypto community that is continuing to pump this to some degree on the heels of tomorrow's election. And so just wondering, with so much wealth having been created, and frankly, you would have made 20, 30% if you invested in Bitcoin literally a month ago. Why do we think that it's not catching the attention of the everyday investor, the everyday user? Is crypto just still too myopic crypto?
Is it sad to say that I'm happy it's not catching the attention of the everyday user? Because when you say things like 30% month over month gains, then often people think that that's going to be sustainable. If we have this podcast in a month, it might be up another 30%. It might be down 80. Both of those scenarios are very realistic. in crypto. So I think that maybe people have a little bit of fatigue about just like the volatility of the prices. And unless it's like, soaring when there's a new all-time high, I think that's when the cycle usually like repeats itself and people have the rags to riches story of they put their $2 in and now it's worth 2 billion because they were in the right coin at the right time. But my take is I'm actually happy that this cycle is a little bit more subdued and the excitement is staying a bit more within the crypto community. But if this continues to happen, we could see another bull run.
Yeah, and I think you're spot on. The volatility is probably one of the reasons that like retail and the brands are sort of waiting because they just see I can't go through this
Well, like
again.
you saw Hangover from 2021.
Absolutely. All right, we're going to go to our guest. For our 100th episode, we decided to call our old friend, Keith Grossman. Keith was the president of Time Magazine, was a bigwig at Wired and Ars Technica and Bloomberg. Before that, really a media professional for many, many years, who then made the jump full onto the crypto side by becoming the president of the enterprise group at MoonPay, which has done a tremendous amount of work in the last bunch of years, bringing people in and being an on-ramp, off-ramp for crypto, which is one of the big challenges we have. So after the break, we'll be back with the ever eloquent and sometimes long-winded Keith Grossman.
Can't wait to have Keith on.
All right, we are back. Keith, this is episode 100. I don't know if you knew this, but we saved this for you specifically because Avery and I think on the first podcast, we said we're not going to invite Keith for as long as we possibly can hold it. And then when 100 came in, we said, who's the guest we have to get? And you were the only name we considered.
First, I'm honored. Second, and just to put my biases out there, I love the two of you dearly. And congratulations on 100 shows. I remember when you launched this. This is amazing. 100. Most podcasts don't make it past 4.
So true.
More than the average then.
96 more. For those who may not know Keith Grossman, Keith is the president of the enterprise group of MoonPay, but also was the president of Time Magazine, was essential at Bloomberg, at Wired, a big macher in the publishing industry, a redheaded Jewish person. We have had so many conversations over the years. And I think both of our favorite people. And Keith has been essential in bringing thousands of people into the crypto space. These days, with MoonPay, millions. So it's really exciting, I think, to have this conversation. We did have Ivan on, I think, 60 episodes ago. So we felt like it was a good enough duration of time to let lag. And so, Keith, we are excited to have you here. I want to kick off because you put out a tweet recently about this being basically around your 2-year anniversary at MoonPay. You've had a ton of accomplishments since then. We'll put that tweet in the show notes. But I just wanted to sort of know how the transition has been for you of going from these very large mainstream brands that you were involved with to now being sort of full-time crypto degen. Tell us about both the similarities of working with mainstream brands, but also the differences of working now all of your time in the crypto industry.
Sure. Well, first, a mucka. I never thought you'd work mucka into an introduction, but I'm very impressed. And, I would say, you have to remember, I wasn't on the journalism side, right? Like I was always on the business side doing strategy, technology, innovation. But my remit was always like turnaround, saves, launches, inventions, right? And so when it was Wired, we were like the 18th smallest brand about to go out of business. Like we had to turn it around, restructure the org. We digitized it back in 2010 and everyone was like, oh my God, that's such a terrible move, right? But we were the first brand that Condé Nast that had over 50% of its revenue coming from digital streams. We launched a tablet edition, with Adobe, where we built the digital publishing suite that Steve Jobs held up. With Ars Technica, was how do you relaunch the brand, but then how do you look at this brand and turn it into something really special? And what we did was we built the Ars Accelerator, which won the Project Isaac Award for Best Advertising Invention, which was a predictive algorithm that could tell if articles would go viral or not. And it grew Ars 85% year over year. And at Bloomberg, it was about how do you take this incredible sort of media company that is built in all these different parts and bring them together to one Bloomberg and modernize it, right? And, we not only launched, active event divisions and one Bloomberg, but launched QuickTake, which was social mobile video. And then at Time, it was really fun because you have this gigantic iconic brand that everyone knows. And we did a lot to sort of bring life back into it under the ownership of Mark and Lynn Benioff. But we also, diversified the Time 100 franchise. We relaunched a Time Studios division, and we brought Time into Web3. When we did that, Web3 was actually like a great, fun sort of thing. That was like a moment for me where I was able to take my personal passion for crypto and bring it into my professional sort of sphere. I've actually loved the crypto space and the degens that you've now associated myself with, Sam, since I was at Wired, because if you asked, and this is what I love about the two of you, that Maya Drazen, who is one of the most incredible people, who's the chief brand officer over at Time. She was my partner with Howard Mittman at Wired, and she was in the room when I wrote the check for the editors of Wired to mine Bitcoin in their offices in San Francisco. She was also in the room when they tore up the seed phrase and they wouldn't give me the Bitcoin on our books. And so like I fell in love with Bitcoin.
Wait, Keith, we're going to need to unpack this story. So we'll come back to this.
We will come back. This is a much bigger story, but like she was in the room when they ripped up the seed phrase, right? And it became a huge fight. And I loved Bitcoin from that day forward. And that was like, I don't remember, 2010, 11 or 12. Like it was really early on. I fell in love with it because in college I was a government major, right? And Bitcoin's white paper is really closely aligned with a lot of the libertarian principles and the issues that were sort of taking place at that time with the financial markets. And it was just fascinating to me as a thought experiment, right? And so when I took Wired into Time into Web3, it was the first time where I was like, wow, this is so interesting that this blockchain technology, this crypto technology, the media technology, memes, right? We're all coming together. And the big aha moment with Time was everyone thinks Time is a written publication, but it's really a visual publication first and foremost, right? Like ask anyone what their favorite cover of Time is. Everyone will tell you. And so like, but ask somebody their favorite article in Time, like some people have them, but everyone will tell you their favorite cover. And what is that really? It's just that they have 100 years of analog memes within those red borders. And that was colliding with the sort of memification of the world through social media. So I love the crypto space and I love being a degen. It's been 2 years and, like MoonPay was a big evolutionary sort of shift as a company, but it wasn't really different for me because it's
Yep.
always doing the same thing, turnaround, launch, redesign. It was in a different industry. I had to learn payments, right? Which is not the easiest at first, but then it gets easier. But it's fun to just think about this every day because as you know this, Sam, from our jokes or Avery from our conversations, like the space is actually great for people who are endlessly curious and want to continue to learn because it's constantly changing and evolving. If I was
Yeah.
to relaunch Timepieces today, it would be totally different than when it was in 2021.
Okay, so you just mentioned Timepieces, which was, I would say, a historic project in the Web3 space and the NFT space for Time. You've also talked a little bit about, your role as sort of like a change agent within more traditional businesses. So paint us the picture of what that was. I think it was beginning of 2021. Your boss is Mark Benioff. You're running Time as the president of Time. You are a self-identified degen. You're interested in crypto. You're interested in Bitcoin. You start to observe what's happening. I know you were paying very close attention to VeeFriends amongst other projects. Can you give us like a little bit of the inspiration of Timepieces? And second, like what were the mechanics of bringing that to life at an organization like Time? And then maybe sort of finish off with like where Timepieces is now.
Sure. So I can't speak to where Timepieces is now because I've been away from Time for 2 years. And like one of the things
As a consumer, you're following it.
So yes and no. What you have to understand with me, Avery, is I will always root for places that I was in the past, but like I don't necessarily stay engaged once my time is done, right? And so like I will always root for it to be successful. I want the community to be successful, but like I don't really follow it as much and as closely. I root for it though consistently when I
Okay,
see it.
well, tell us, bring us back to when you were there, because you did launch it, and I think that Timepieces made headlines not just in the news category, but in the media category, and spawned a whole, host of copycats who tried to do something similar. So unpack this for our audience. Like, what sort of was the inspiration? What were the mechanics, and
Sure.
what happened next?
So picture this. Where were you in April 2020? Literally put yourself in, where were you April 2020?
I was at my computer 23/7, and that was when we at Vayner were reacquainting ourselves with NFTs.
Okay, but
I
where?
was in Singapore though.
Okay, right. And where were you, Sam, in April 2020, right? Like this is now everyone's working from home. It's really the height of the pandemic. Where were you in April 2020?
I was in Brooklyn. I had not yet accepted a role at CoinDesk, and I was trying and succeeding at getting the company that I was trying to get sold.
Awesome. So in April of 2020, I was living in Clifton Park, New York, okay, with my wife, daughter, our dog at my mother-in-law's house as the president of Time, okay? And
Ellen.
like
And you're still there, from
hold
what I
on.
gather.
Yes, I am. No. And I say this because it's really funny in the sense that, everyone has these like romantic ideas of where people were during COVID. Like I was not in a romantically wonderful place. I was isolated upstate New York. No friends were around me. I actually on Instagram, you could see it. It's still there. I walked over 1,000 miles, right? Every day because I'd pace Clifton Park in a Time for Kids t-shirt. Nobody in Clifton Park understood why the president of Time was walking around on his phone nonstop. I had no friends near me, but I was always on Clubhouse. And while I was walking and I was thinking to myself, man, I don't have any friends around me, but I'm talking to people every day and everyone feels engaged with me because of Clubhouse and because of Twitter and because of all these things. And it was the first time in my life where I realized my digital extension, my digital ID online and social was not a nice extension of who I am. It actually was equal to who I am, right? Like your digital identity is equal to your physical identity. That was like this realization I had one day while I was walking. And I coincidentally went into a room that was talking about NFTs. I don't even know why. And what I was fascinated with was this idea that they were talking about. And it was Jay and Silva, and it was Ryan Wilson and Thank You X, and it was Dave Krugman. And they were talking about this idea of digital ownership and that this technology would allow a token to verify your ownership. And my thought on that was this is really interesting. How can if my digital identity is equal to my physical identity and I want to own something in the real world, maybe I will one day want to own something in the digital world as well. And this is what will now allow me to do that. I spent a lot of time in Clubhouse rooms asking an insane amount of questions. That's where you and I met. That's where all of us actually met in a lot of instances. And a lot of people were there when I asked some of the stupidest questions, some of the most basic questions, as I just was absorbing what was going on. I knew something was happening. I couldn't put my finger on it, right? I didn't realize anything. Like it didn't snap to me until one day when I got a text message from Mark Benioff and it said, "Did you see this?" And the text message was a link to the Nyan Cat sale. Like it went for $300,000. And I looked at that thing and it clicked so fast, like no other. And I said, "Can we get on a call?" And Edward Felsenthal, Mark Benioff, and I got on this call and I said, "Do you guys understand why a cat with the body of a Pop-Tart farting a rainbow just went for $300,000?" And they looked at me like I had 5 heads. And I was like, trust me on this one. I got it. And what clicked was what I said in the beginning, which was what Time really was most powerful with was depicting what was happening in the world with a single image, right? So it was analog memes. And what Nyan Cat was a digital meme. And what was actually happening was digital memes were being monetized. And so I started to push down this path that we were going to do this. And Mark said, "Well, if you want to do this, I have a friend who can help you." And he put me in touch with Guy Osieri, and he put me in touch with Anthony Pompliano, who I'd been speaking with. And he even put me in touch with Mark Cuban, who gave advice too and was so wonderfully incredible. And Guy Osieri did something for me that I will never forget. He said, "I'm going to take one night and I'm going to give you like a speed dating experience within all of the portfolio companies that we're looking at Sound Ventures." And I met all these people and they were so impressive, right? And like Devin Finzer was in his basement with Alex, like typing away, and I met like Jimmy that ETH, and I met John Crane, and like all these people were doing this stuff, and they were all really nice. But the two people that were like the most incredible in terms of jumping at me was Jimmy Duddy, right? Jimmy McNeilis and John Crane. And John Crane actually taught me how to mint my first NFT. He lent me money to mint it, like, and to buy Ethereum. It was amazing, right? Like, and after that, like, we started to realize like we wanted to embrace the space. So like we wanted to actually be very organic. So the way that we thought it would be the best to be organic was start to accept subscriptions in crypto, right? And so we opened up to that, and we thought that that signaled a lot. And then we started to accept payment in Bitcoin and Ethereum. We did a deal with Digital Currency Group that we were paid in Bitcoin. We did a deal with Galaxy that we were paid in Ethereum for. We started to launch more verticals and cover the space a little bit more to show that we were committed. In the meantime, I couldn't figure out how to build a community. And then Gary launches BeFriends. And I'm watching this, and I'm not shy in saying this. I've said this publicly many years. Gary's the master of spotting trends very early. And he really, like, it's amazing. I went on to OpenSea, and I opened up a spreadsheet, and I went through every character in VFriends, and I categorized it. And I started to realize what he was doing with traits and rarity and all that stuff. And I built the business model of timepieces off of VFriends, meaning like it was there. When it came to launching timepieces, there were a few things that I wanted to do that were really important, right? Like, since we were walking into a new field, one of the things that you see in media today is the economics are messed up, right? Like, journalists are creating a lot of content. They don't make any money off of it. And so I was like, well, if we're going to create an entirely new sort of business model, let's create a really fair one. And so since secondaries were there, what I said to all the participants was, come in and participate. Give me your work. And what I will do in return, if you're a participant at any point, is we will give the first 1% to charity, and then we'll split the first 2% to charity, and then we will split the remaining evenly between time and you in perpetuity on both primary and secondary sales. And so we were like, how do we do that? And then we started to build out like what our go-to-market strategy was. In the meantime, I actually didn't need to ask Mark for any money to fund timepieces. And here's why. The only person who I launched with in the beginning was John Crane on Super Rare. The only promise Mark Benioff gave me, or that we had come to, was the only two currencies I could hold, or tokens I could hold on our books, were Bitcoin and Ethereum, right? So I couldn't hold anything else because everything else was too risky in everyone's mind. After we had that first day, everyone focused on those sales that did $440,000. What people didn't realize was like, I did like 10 other sales that nobody got press off of that produced millions of other dollars. And what that really was like was, it was like episodic revenue, like advertising revenue, right? When Super Rare did its DAO conversion, they issued tokens to everyone who had done an incredible amount of work. I missed the email. Do you know the story, Avery? Do you know what I'm about to say? I missed the email. And John Knopf is like, oh my God. I don't know if you've ever spoken to John. Oh my God. Now he's going to, when he hears this on this podcast, he's like, did you see Super Rare converted? And I was like, no, I missed it. Mike Amir was, so Mondoir, did you see Super Rare converted to a DAO? Oh, I missed it. And I looked, and it was in my trash, and I did claim tokens, and I had $1.4 million worth of Super Rare tokens.
And this is how you got a ledger, I think. Am I wrong?
Yes. Wait, this is how ledger came into the equation. This is how everything. So I had to convert it based on our agreement to Ethereum that day. I transferred $1 million back to Time as profit. I held on to $400,000, and I used that $400,000. I used that $400,000 to fund the launch of timepieces. And so it was like, it was profitable from day one, right?
-1. It's an amazing story. And like, just, that's a perfect bow on top of it. 'Cause that is how I, came to be aware that Keith Grossman had $1.4 million of tokens just sitting in the cloud. And then he became acquainted with Ledger. But I want to make sure we get to MoonPay too, because as you said, that was a couple of years ago. That was an incredible story. I mean, and you got all kinds of accolades. I think Timepieces was well known for making over $10 million of profit during this time. And your commitment to charity throughout, I think, was really unique and special, and co-creating with artists. But let's fast forward. Now that kind of got you in the mix. That got a lot of enterprise brands and enterprise companies talking to you and getting your perspective of like, how did you do this? What did you see about this? You were an early mover here. And that kind of led you to MoonPay. Tell us what does MoonPay do?
So MoonPay is, I would say, the largest decentralized on and off ramp in the space. And what is an on and off ramp? It really is, like if you want to buy crypto or sell crypto or swap crypto, we enable it. And what makes it special is if you believe that this is a trend that's increasing, which is the adoption of these digital assets, right? It's too hard to go from like the system that you're in and used
Mhm.
to this whole entire new system. And so MoonPay's entire sort of remit is ultimately, let's just make it easy. How do we bridge that? Right? How do you use your credit card or your debit card or Apple Pay or PayPal or as of last week, Venmo to be able to buy crypto or sell crypto or trade crypto very easily within the sort of use cases that you know and love and have in your pocket. It has a secondary business, which is a B2B business that's tied to our agency Other Life that helps brands, similar to like what you do, evolve using blockchain technology. And to that extent, we help people like MasterCard or Dorian or the likes sort of continue to think about their Web3 evolution.
Keith, I want to jump into on ramps, off ramps a bit. I think we are still not where we need to be, right? I think about trying to buy my first Bitcoin in 2000, I think it was 13. And like, even though I think Coinbase existed, it was so challenging to get anything. You really needed to be a programmer back in those days. And it feels like fast forward 10, 11 years, we're still like buying on Coinbase to then send over to wallets. And I know MoonPay is one of the solutions for this, and there's a couple of them out there. But it does feel like the idea of when I buy something on Amazon or I buy a digital subscription and I'm just doing Apple Pay, like it's still so much easier. And we all complain, I think, about the UX of crypto. And I know it's only a 14-year-old industry. But why do you think it's still taken us so long to be able to get to where people are natively just thinking in crypto from a back and forth perspective? And we are still, frankly, getting so much pushback, as we know, regulatory perspective, but even within like the Apple Store, you can't pay in crypto. Like, what is it going to take to make retail and the normal user feel comfortable in utilizing MoonPay to put crypto in a wallet and then use it?
Sure. So you had a lot in there. So I'm going to unpack it like piece by piece, if that's okay. When I was in the media side, people would ask me a very simple question every day, which was, is print dead? And my answer to them was, I don't know. What I do know is one very simple way of observing a trend line. And, the way I looked at print was every day that someone was born onto this planet and every day that someone died on this planet, a new print reader was not replaced one to one with an old print reader who left the planet, right? So what that means is that print is on a
Off the
downward.
planet. That's a nice euphemism, Keith.
Right? Yeah, no, but like it's like when you think of it at that extreme, it kind of is like I kind of get it, right? And it's like I don't know the level or the rate at which the decline's happening, but I know that the decline is happening. And then if you flip that equation around, what you have is you have the opposite taking place when it comes to digital ownership and assets. Every day someone is born, every day someone dies, someone who feels comfortable with digital ownership, right, is born at a higher than 1-to-1 ratio. Now, I don't know what the adoption sort of curve is going to be in terms of speed, but I know that every day we're playing on a positive trend line, right? And so that would be point one. Point two would be most innovations take place when most major innovations take place when a technological innovation occurs and ultimately meets a generational sort of shift in power. And I think we're kind of there right now. And I'll give you my proof points for why I would say we're kind of there right now. When you look at the companies that are going to adopt new technologies, and this is one of the things that like has been my forte for my career, most people will go to the largest company they know. And what I would argue is you want to go to the company that has the CEO that has to prove themselves or the CMO that has to prove themselves. You don't want to go to the CEO or the CMO who this is their last job and they're retiring in 2 years because it's done. And the reason you need to do that is because the CMO or the CEO that's going to retire in 2 years is not going to take risk. I think PayPal is a wonderful example of that under Alex Chris, right? And I personally loved Dan Schulman too, right? He was wonderful to me at time. And, we would not have PYUSD without Dan Schulman's sort of lessening because of the type, Avery, on your part. But Alex is, a year into PayPal. It's his first CEO job after 19 years into it. And if you look at what he's doing is he elevated Jose Fernandez de Ponte, right? So that way now there's a direct lead into, crypto to the CEO. He brought in a brand new group of leadership, in the C-suite. And he said, like, let's think differently about the ecosystem that we have. And lo and behold, when you look at like some of the biggest announcements we've made over the past year, right? Like it's how do we integrate PayPal to bring it into the consumer experience? And you know how it's ultimately done? Is like because their compliance department and legal department won't allow PayPal into some of the decentralized world. And because we have such a rigid compliance department and, that's huge on every level, and we do this every day, we are contracted with them, who is then able to bring the access into and vet all the compliance within the ecosystem that we know, right? That's a really interesting play. The same thing goes for a place like MasterCard and Michael Maybach, right? Raj is a different beast. Raja is consistently innovative on every level. As a matter of fact, not to hawk Raja, but I like him so much. I have his book right here, right? Raj is just consistently innovative, but MasterCard is the same thing. A relatively new CEO evolving in a modernized world. I think that the big lesson that we learned on digital crypto assets and technology from 2021 to today is the NFT evolution in 2021 presented NFTs as a consumer facing good, and it's actually plumbing, right? And that's why I say if I was to
Plumbing can
redo,
be consumer facing, Keith.
well,
No,
yes
just
and no, like it's more like, and I wrote an article, Avery, like called "Nobody Cares How Your Toilet Works," right? Like the ultimate benefit of NFT technology is efficiency. It's authentication. It's digital ownership. But that's stuff that can exist behind the scenes. It just have to create a better consumer experience. And so the weirdest thing that I come across consistently is when is crypto going to have a real world use case? And I would argue it already does. The real world use case of crypto today that we are beginning to see adopted is stablecoins. Okay. And the speed at which stablecoins are being adopted is incredible. Right. And the ultimate reason stablecoins will be, so important is because it will remove a lot of the gatekeepers in the global financial ecosystem and it will free up this world. Now, you, Sam, are responsible for the way I'm thinking about this because you said to me one day that the internet was the entire, what was your exact words? It was the largest, it was a
It's the
global
largest borderless nation state on the planet.
100%. So
And
when
stablecoins are the currency.
so Sam, say that once again.
I said it's the largest borderless nation state on the planet, and stablecoins are the currency.
So when you said that to me, and I walked home and I couldn't stop thinking about that because what it did to me was it said every time the internet has engulfed any technology, it's brought the price down to zero of transmission. And I started to think about things like telephone calls, right? And like telephone calls to India when I was growing up, those AT&T ads that would be like $2.49 to call India don't exist anymore because WhatsApp and voice over IP has made it free. And when you said that to me, it was the first time I was like, wow, you're totally right. And when the stable coins become the global currency, the transmission of money in a programmable, embedded financial manner is going to become free. And when you do that, all of a sudden you take remittances cross border and you all of a sudden take these fees of 7 to 13% and they come down to pennies and they remove all the inconvenience of having to go to locations because you could do it on your phone. Right. And I'm like, that isn't, and this, by the way, you messed me up, Sam. Like this was your
That's what I do,
fault.
Keith.
But it put me down this whole path of just thinking about that. And when you look at a country like Venezuela, where 6% of their GDP was remittances, you have to think to yourself, there's something 100% happening in the financial ecosystem that's going to be unbelievably tectonic in terms of a shift. And I would argue, as a final point on that, that what I think tokenization will do to the financial ecosystem will probably be as disruptive as digitization was to the media industry.
Keith, let me just jump in for a second, because I think, and I'm going to challenge you on one thing, and I want to praise you for listening to me. And I'm a full believer that stablecoins are the in-game currency of the internet, right? Like, I think that's really the way it lasts for me. And when I was in London 2 weeks ago and meeting all these people at the Stellar Conference who are building for Africa, building for Peru, building for Southeast Asia, where they do not have a robust financial system and they cannot even get a bank account, right? So you meet a creator who's trying to be a filmmaker and they can't pay their crew. But now, because folks are building wallets, they are able to then have a rich financial experience that has nothing to do with crypto in their heads, with the exception that they get to pay each other and somebody is not stepping on a 20%, 20%, 20%, and they actually get to keep their money. So I think that yes, it's been the biggest unlock for me in the last year is that concept. So thank you for also being part of the faithful who believe it. The thing that I thought was really interesting, and I will say this basically on this conversation that I had a week and a half ago, was we were talking to Alex Holmes, who's the president of MoneyGram. And MoneyGram is 140 countries. They are the off-ramp for crypto for a lot of these countries. And they just announced their wallet. You guys have your wallet. Everyone has their wallet. And the unlock for me, and I want to get your thoughts on, was we have to stop thinking of wallets as MetaMask and Phantom and Coinbase. We have to start thinking of wallets as Revolut and PayPal, right? These are financial instruments for folks who don't have those tools, for credit, for lending, for peer-to-peer payments, for the ability to crowdfund. All of these things, it's such a big mind-blowing thing. But I think none of that happens in the US. I think none of that really happens in Europe. I think it all happens in the global majority countries. And I guess what I want to know from your perspective, because I think a lot of the stuff you're doing are working with more first world countries, is how do you get those 4 billion people who really need it to do so? And what are your plans to make that MoonPay's mission?
Sure. So MoonPay's mission is ultimately like how to democratize access to this ecosystem, period. And you bring up a lot of amazing points. One of which
I'm very succinct.
No, you are when you are, right?
It's like when I am.
Avery, thoughts? Avery's like just sitting back, like, I'm not even jumping into this crap, right? Like, no, it's like,
It's hard to get in a word with you two. Especially you, Keith. You've got a lot to share, which is amazing.
no, I'll shut up with you.
You're the guest. We want to hear from you.
No. But Avery, do you want to add to that by any chance before we jump into anything else of this? Where it's like, do you agree with Sam? But right, because it's interesting on the topic.
I think right now, from the outsider's perspective, I don't work at MoonPay. You do. I think a lot of the work that I'm seeing is sort of Western world centric, but that's where it is today. In the future, I mean, what you just said, Keith, around the 6% of Venezuela's GDP going to remittances, that is the opportunity. And I think a lot of, in our world and in my job, a lot of our clients are very focused on what's happening with the places that have the budget, the places that like make the biggest impact on share price today. But I think in the future, like if we look in 10 years down the line, this will just be some of those markets are a place where this makes a lot more sense than it does in the US. And then in the US, it's like early adopters is people like us. That's not everyone. And like not a lot of people have the same amount of incentive to seek a different financial system versus in other parts of the world.
So I'm going to jump in to what Avery said and then come back to what you said, which is I don't think that we should think about it as a different financial system. I think all major innovations start from pure libertarian principles, right? Like that we could change this, we could do that, we could counter this. And there's a purity in the philosophy of all of them. All mass adoption occurs when there are trade-offs that lead to convenience for adoption, right? A great mental model on that is something Sam and I, when we were at Columbia at a crypto conference, I did in the crowd where I said, how many of you believe in data privacy online? And everyone raised their hand. And then I said, great, put your hand down. I said, how many of you on your phones have Facebook, Instagram, or WhatsApp? And everyone raised their hand. And I said, put your hand down. And I said, stand up if you believe Meta has your best interests at heart when it comes to data security, and nobody stood up. And so there's a hypocrisy that people are willing to give up when it comes to convenience. And I think right now the crypto ecosystem is coming to grips with the fact that like the pure aspects of it, self-custody and sovereignty and all that stuff, and it is at times going to give way to semi-self-custody and semi, decentralization. I also don't believe that there's going to be a new financial ecosystem that replaces an old financial ecosystem. I think it's literally going to fix and create new pathways within the existing financial ecosystem. And I think adoption occurs when the existing ecosystem creates mechanisms that can absorb this new ecosystem. And the Bitcoin ETF is a great example of that, right? Like there's nothing different between the Bitcoin that's held in the ETF by BlackRock and the Bitcoin that you can get from MoonPay, right? I also look at the world and I think that the world will divide itself into like an iPhone, Android sort of end state. The iPhone end state will be a highly regulated, highly compliant KYC AML world. That's where we're taking MoonPay, right? Like that's why we've taken all of the licenses that we've done. That's why we take it so seriously. That's why we are, doing everything to be MiCA compliant. That's why we did the FinProm stuff in the UK. That's why we do everything that we do on that front. There will be a Wild West area, the Android area that continues to exist, but it won't be adopted, I think, on a mass level. Now, you're correct. Both of you are correct in the sense that stable coins and a lot of those remittances will be wonderful for countries that are not stable, right? And we're lucky. We're in the US. No matter how unstable you might think the US is right now, it's far more stable than some of these other countries in the world. And the number of countries that are not stable are far greater than the number of countries that are stable in aggregate. But stable coins are just one aspect of industry that will impact the financial sort of remittance world. Ultimately, a lot of this technology will coexist with AI. And if you look at AI and ML and the adoption of that as it sort of takes off, it really all it's doing is speeding up companies and making them more efficient with decision-making processes. The only way to keep pace with AI is going to be a blockchain, right? No human could pace AI. And so ultimately, as more and more jobs are disrupted by AI, more and more jobs are going to be disrupted because margins are going to be compressed and you're going to need a blockchain to be able to counter and keep that efficiency going. But the technologies that marketers are going to look at when it comes to blockchain are going to be relatively small. They'll be focused on things like loyalty and subscriptions and memberships. But the areas of impact that blockchain will have for marketers will be very relatively large. And that will be similar to the way your high definition television works, where it's all behind the scenes. You don't care that it's there. You don't talk about it that it's there, but it's just a better picture than what the old picture was, right? So I think that the new technology comes back in and helps in a lot of that area.
Keith, when this episode airs, tomorrow will be the election. And I know you and I joke a lot back and forth on, we both actually, I think, very firmly believe that crypto should be a bipartisan issue. It has not always played out that way on Twitter, let's just say. So why do you think, in your opinion, that we should maybe give up our tribalism around this and just focus on that the technology itself should be in the best interest of anyone looking to vote tomorrow?
You want me to get canceled, don't you, Sam, right? Like you want me to say something about the elections and get me canceled behind me.
You don't have to talk about the election. I want to know why it's not bipartisan.
Behind me is my election day shirt. Okay. That's the shirt I'm wearing tomorrow. A little background on me. I love politics. I also have donated equally in my time to both Democrats and Republicans, dollar for dollar, if you want to look me up on that. And I could point to great Republicans and I could point to great Democrats, okay, on both sides of the aisle. The problem with crypto is when Sam Bankman-Fried spent so much money supporting the Democrats and he was purported as a fraud, he embarrassed so many people. And in that embarrassment, I think there was a counter movement. And if you actually look, there's an incredible article by Molly Ball, and I think it was October 11th, 2021, called Crypto Goes to Washington. And she was saying, like, look, like crypto's getting a little arrogant. And this is a month before Sam Bankman-Fried, all went down. And she goes, crypto's getting a little arrogant and they better sort of watch it. And when that happened, I think what we saw in the Democratic Party was a counter movement against crypto. And I think initially it was reactionary, and that's sad, but it's understandable in every regard. It makes no sense when you think about what the Democratic Party supposedly stands for, which is the party of the largest group of people to be inclusive. Like crypto is the most inclusive sort of offering to anyone who is not represented in the current financial ecosystem. I think at the same time as that movement started to happen, Republicans, in some instances, opportunistically jumped in and saw that this could be a really big issue with a lot of money behind it and started to stoke a lot up. And I think actually, as things started to settle, while it may look like one party skewed over the other party, the reality is, if you look at Stand with Crypto, which is an organization that I support in terms of a donation from MoonPay with Ivan and the organization, I did an analysis of all of the policymakers and all of the elected officials that are rated A, B, C's, D's, and F's. And the overwhelming reality is across both parties, you're going to find that 68% of the people on the Stand with Crypto site are rated an A or a B. So like the largest majority. The unfortunate reality is that the smallest majority, the D and the F, which is 25% of the remaining, is really loud and vocal about like how awful crypto is. And they factually misrepresent it. And unfortunately, for people who wish it wasn't partisan, they are on the Democratic side. They are the individuals like Elizabeth Warren. The interesting thing is when you look at action, though, from someone like a Gary Gensler, he ultimately was the deciding vote to pass the Bitcoin ETF. So, like, there's a lot of confusion and disarray when it comes to like who stands for what, who says what, what's performative, what's real, what's not real. The overwhelming reality is this: America's the greatest country on the planet to be able to innovate and create and invent. We are like, that's our blood, is to do that. All I want at the end of the day is what are the rules that we have to operate against so that way we can continue to innovate. And I think that there's a large group of people who want that in the industry. And I think there's a large group of people who want that in government. This election is going to determine tomorrow two candidates that will ultimately, in my mind, produce an outcome that net will be fine for the industry, right? We may see a much larger acceleration with a Trump victory than we would with a Kamala victory. However, with a Kamala victory, I'm willing to bet that you see a better situation than you currently see. And the reason I think you'll see a better situation than you currently see is based on the post that I have pinned on my Twitter feed back in March that got a few 100,000 views when I said crypto will become a wedge issue for a large group of people. Elizabeth Warren purported that there was an anti-crypto army. There is no such thing as an anti-crypto army, but there is a crypto army. And what she did in making this sort of a partisan issue is she rallied a lot of people whose livelihoods were there. And the problem with what's happening in the world today is there's a lot of people who believe in things philosophically, and then at the end of the day, they have to put money on they have to put food on the table, and their livelihoods are being affected, and they feel like they're being threatened because there's this whole anti-crypto army coming after them. There's no such thing, right?
Yeah.
But there is a crypto army. And so I think that the net is coming out of this election, regardless of the outcome. And I don't even want to posit what I think the outcome will be, but regardless, I think we will see a positive move in either direction.
All right. What a mic drop. What an ending to the episode. Keith, I feel like you are just packed full of gems and insights. I feel like we learned a lot about you from your long walks in upstate New York to your libertarian foundations to, the impact that you've had on so many iconic brands and so many iconic companies, MoonPay being among them. So thank you for taking the time to join us on Gen Z today. This was a very special 100th episode. And Keith, it has been just an absolute pleasure having you on.
May I have one last word and just say, Avery, Sam, I love you two very much. You're incredible. Congratulations on your 100th anniversary or 100th episode. Sorry. You're great.
It is our anniversary as well.
We'll save
An
this.
anniversary. Congrats for the anniversary.
You're the best.
Keith.
Thanks so much, Keith.
Thanks, Keith.